All right, today we're going to pull back the curtain on something that every single business speaks: accounting. This is the key, the absolute key to understanding how any company, big or small, actually works.
Seriously, have you ever stopped and wondered what's really going on under the hood of a company? You know, from your local coffee shop all the way up to a huge tech giant, how do they keep track of everything and make those big decisions?
Well, it all starts by learning its language. And you know what? That's exactly what we're going to do right now. In just the next few minutes, we're going to teach you the basic grammar of business, the core ideas of accounting. And trust me, it's way more straightforward than you might think.
Okay, so let's jump right in, starting with the big question, the why. Why on earth is this one subject so absolutely critical?
You know, the best and simplest way to think about it is this: accounting is the language of business. Simple as that. It's the system that lets a company communicate all its financial information to literally everyone who needs to know. We're talking managers, owners, investors, even the government. And this language, it has a rhythm, a clear, logical process. Think of it like a cycle. First, you analyze what happened. Say you made a sale. Then you record it, you classify it. Hey, that's revenue. Then you summarize it all up, report it, and finally, and this is the important part, you interpret what it all means to tell a story about the company's health.
Okay, quick sidebar, but this is super important. People get bookkeeping and accounting mixed up all the time. Here's the easiest way to remember it. Bookkeeping is just writing down the words. It's the recording part, entering the data. Accounting is writing the whole story. It's the complex analysis, putting together the big financial statements, the whole shebang. Bookkeeping is a piece of the puzzle. Accounting is the finished puzzle.
So we've got the why down. Now let's talk about the who. Who are the different players in this game?
All right, so businesses come in a few main flavors, and this table lays them out perfectly. You've got your sole proprietorships, that's one person, partnerships, more than one, then corporations and LLCs. But here's the real kicker, the thing you have to pay attention to: liability. With the first two, your personal stuff could be on the line if things go south. But with a corporation or an LLC, your risk is usually just limited to what you put into the business. That's a game changer.
And it's not just about the legal setup. Businesses are also sorted by what they actually do. You've got service businesses. They sell you their time and skills, like a pet sitting company. Then there are merchandising businesses, like Old Navy, that sell you stuff someone else made. And finally, you have the manufacturers, your Nikes and Teslas of the world, who are actually making the products they sell.
Okay, so we've got the why and the who locked in. Now for the really fun part, the what. This is the actual grammar of business I was talking about.
To get this, we just need a couple of keywords. First up, assets. Super simple. This is just all the valuable stuff a business owns: cash, computers, supplies, the office building, you name it. And on the flip side of that, you have liabilities. This is basically what the business owes to other people. Think loans or buying supplies and promising to pay later. It's someone else's claim on your company's assets. And when you take those two ideas, assets and liabilities, and add one more, owner's equity, which is just the owner's own claim on the stuff, you get the absolute bedrock of all accounting, the accounting equation. Assets equals liabilities plus owner's equity. That's it. Everything the business owns is claimed by either outsiders or the owners. And here's the golden rule. This equation always has to be in balance. Always.
But you know, just knowing the equation is one thing. Seeing it in action is where it all clicks. So let's get to the how and actually watch this language being spoken.
So let's imagine a new business started by someone named Jess. Her very first move, transaction A, is to put her own money and gear into the company, $6,000 in cash and a computer that's worth $200.
And boom, right away you see the magic. The business now has assets worth $6,200. And since it doesn't owe anybody anything yet, the entire claim to those assets belongs to, you guessed it, the owner. So the owner's equity is also $6,200. Say, perfectly balanced.
All right, transaction B. Jess's new business takes $500 of that cash and buys some more computer equipment.
Now, watch this, because this is cool. This is what's called a shift in assets. Notice the total value of the assets didn't change at all. The cash part went down by $500, sure, but the equipment part went up by $500. One asset was just swapped for another. The total stays the same and the equation, it's still balanced.
Okay, one last transaction to tie it all together. The business gets another $300 worth of equipment, but this time it's bought on account. That's just a fancy way of saying we'll pay you later.
And there it is, the final piece of the puzzle. The asset side of our equation goes up by $300 because of the new gear. So, to keep things balanced, the other side has to go up by $300 too. And that creates our very first liability, what's called an accounts payable. The business has a new asset, but now it has an obligation, a debt. Both sides went up by the exact same amount. It's still perfectly balanced.
So what's the big takeaway here? It's that a business is its own thing, completely separate from its owner. And that's why every single financial event, whether it's a massive sale or just buying a pack of pens, gets run through this accounting equation. It's the universal logic that makes business work.
When you step back, this simple little equation is actually doing something pretty amazing. It's telling a story. It's tracking every decision, every win, every risk in the life of a business. So, now that you know the basic grammar, the real question is, what stories are the businesses all around you telling?